Most people jump into online business, don't realize that the key to success comes down to a few simple metrics. If you get these right, you can build a business that generates serious cash flow with minimal stress, but you get it wrong, you'll spend months, even years, spinning your wheels, not knowing what's going on, and building something that yields you negative returns in the long run. That's why in today's video, I'm going to take you through the 6 key metrics that you need to look at when choosing an online business model in 2024. We're going to compare the pros and cons of high ticket dropshipping, Amazon FBA, traditional dropshipping, affiliate marketing, and SMMA. So you could grab a pen, take your notes out, and get ready to make the best informed decision to figuring out which business model is best for you. And for those that are new to my channel, welcome. My name is Marcus Lam. I'm from Brooklyn, New York, and it is my absolute pleasure to meet you. With that being said, let's get started right now. Let's start off with traditional dropshipping, the business model that most people are familiar with. You know the drill, find cheap products from China, sell them on your store, and pocket the difference. Sounds simple, but here's the reality. Traditional dropshipping is a race to the bottom. You're essentially competing against thousands of other stores, all selling the same cheap products with low profit margins. Now, let's compare that to high ticket dropshipping. High ticket means higher margins, fewer sales, and less stress. Think about it. Would you rather sell 200 phone cases to make $2,000 or make the same $2,000 from 1 or 2 sales? And here's the real difference. In traditional dropshipping, your profit margins are typically around 10 to 20%. So even if you make $10,000 in revenue, you're only pocketing $1,000 to $2,000. Now, compare that to high ticket dropshipping, where margins could be as high as 20 to 50%, meaning you keep a significant chunk of that revenue. With high ticket, you don't need hundreds of sales. You just need a few well-placed high ticket sales to hit your income goals. Now, let's talk about fulfillment nightmare. In traditional dropshipping, you're dealing with suppliers from AliExpress or Alibaba, and the shipping times are honestly terrible. Customers wait weeks, if not months, for their products, and you're left dealing with angry customers and refunds. Trust me, I've been there. Instead, with high ticket dropshipping, you could partner with premium suppliers that ship quickly and provide excellent customer service. You're not relying on low quality products and shipping times from China. Instead, you're selling high-end products that people are already searching for, and you don't have to worry about inventory or supply chain because your supplier has all of that figured out for you. Now, let's talk about Amazon FBA. A lot of people think it's the holy grail of e-commerce. You list your products on Amazon, then Amazon sends it over to your customers, and you have the perfect world. Sounds perfect, but not so really. Here's the catch. You need upfront capital to buy inventory. We're talking about anywhere from around $5,000 to $15,000 just to stock up on products that may or may not sell. And if they don't, you're stuck with unsold inventory, losing thousands of dollars and disrupting your cash flow every single batch. Now, compare that to high ticket dropshipping, where you don't have to buy any inventory upfront, where you only purchase the product from your supplier after you've made the sale, and there's way less risk, way less stress, and higher rewards. Let's also talk about the fact how Amazon has fees that take up to 30 to 40% of your profit margin just for listing it up on their platform. With high ticket dropshipping, you have control over the margins. You can make $1,500 to $5,000 in profit per sale without giving any huge cuts to Shopify or Amazon or any of these web hosting platforms. But now let's talk about the next business model of them all, which is SMMA, which in short stands for Social Media Marketing Agency. Now, don't get me wrong, I am not here to on any of these business models. SMMA can be a great business model. You offer marketing services to local businesses, manage your social media, run their ads, and you get paid. But here's the problem: getting clients. When you first start out, it is very hard to convince business owners to trust you with their marketing budget, and you'll end up spending weeks, if not months, cold calling, pitching, and hoping just to land 1 or 2 clients. Now, compare that to high ticket dropshipping, where instead of chasing clients, customers come to us. They're literally searching for high-end products, and you're simply showing up where they're looking at. which is on Google Ads. You don't need to cold call, you don't need to beg for business, you just need a consistent Google Ads strategy and a well-designed store, which is all taught inside my free community at peakflowacademy.com. All right, now let's put everything side by side and compare these business models using our key metrics, starting off with unitary gain, startup capital, profit margins, demand, fulfillment, and scalability. Let's go into all of these metrics and let's have a comparison between all of these business models, and we're gonna get started right here. Let's do it. So now, let's start with unitary gain, which is just a fancy way of saying how much money do you want to make per transaction. With high ticket dropshipping, this is where the model shines. Instead of selling $20 gadgets, you're selling products that cost $1,500, $3,000, even $10,000, which means that with just a few sales, you could easily make $10,000 a month. For example, a $3,000 massage chair with 40% profit margin gives you a take-home profit of just $1,200 off just one single sale. Do that 8 times and you're looking at close to $10,000 in profit coming into your bank account every single month. Now, compare that to traditional dropshipping where the average price point of a product is typically $20 to $50. You're making $5 to $10 profit per sale after fees and advertising costs. To hit $10,000 in profit, you're looking to sell over 1,000 units. And the truth is, that's a ton of work. There's a ton of customer service that's going to be involved. There's a ton of fulfillment. There's a ton of logistical chains. That's a hell of a nightmare. Now with Amazon FBA, unitary gain is similar to traditional dropshipping. Most sellers are pushing products in the $20 to $100 range. And after Amazon fees and advertising, you are left with 10 to 20% margins. And don't get me started on the fact that you're still needing to move hundreds of units just to break 5 figures in profit. Affiliate marketing is even tougher. You're typically earning a commission between 5 to 20%. So if you're selling a $100 product, you might only see $5 to $20. Again, you are looking at hundreds of sales a month just to hit serious numbers. Lastly, there's SMMA, $1,500 to $10,000 per client per month. But remember, you're trading time for money because you're essentially going to actively manage all of your clients' accounts, and the unitary gain is high, but it's capped by how many clients you could manage all at once. Next, let's dive into startup capital because this is where a lot of people get tripped up. High ticket dropshipping has a low barrier to entry in terms of capital. Unlike Amazon FBA, you don't have to buy inventory up front. You're only paying for ads, hosting, and maybe a website. And you could start with as little as $0 to $2,000 if you're lean. And I have tons of videos on my YouTube channel on exactly how to get started with a high ticket dropshipping store with the financial restraints that you might have. So go check it out, or I'll put it in the description down below. But once you make a sale, you essentially will take the customer's money, therefore no inventory risk. Traditional dropshipping also has low startup costs, but there's a catch. While you don't buy inventory up front, you'll need to spend money to test dozens of products. You see, most dropshippers burn through $500 to $2,000 just to find a winner, and that's not even counting ad spend. It's risky if you don't know what you're doing, and that's exactly what most beginners go into the world of e-commerce do. They don't know what they're doing, they're following gurus that are promoting a failed business model, and they're wondering why they aren't getting results. Well, do you see why, guys? Because you guys don't even have the foundations of a true foundational business, which includes all of these metrics that I just said and everything that I'm about to show you. So make sure you guys are sticking with me in this video. I know it's a lot, so make sure you guys take a quick pause if you need to, but let's continue. It's risky if you don't know what you're doing, especially with traditional dropshipping. That's why I have an entirely free mastermind on how to get started the right way using high ticket dropshipping. The guide is completely free. It's over 10 plus hours of content. It is yours for the taking. I'll put it all in the description, or you could check out peakflowacademy.com. Amazon FBA, on the other hand, It's a capital intensive type of business. It's very capital heavy, and you'll need anywhere from around $5,000 to $15,000 just to stock up on inventory. And if your products don't sell, you're stuck with them. Or worse, you'll have to pay Amazon to dispose of them. It's a big upfront capital investment, and most new sellers don't see a return for months. With affiliate marketing, it virtually has no upfront costs, and you don't need to buy any inventory or deal with any fulfillment. But here's the downside. Without investing into ads, you're relying heavily on organic traffic that could take months, if not years, just to build that personal brand. With SMMA, other way known as social media marketing agency, you could also start off with low capital. It depends on how you want to approach it. You may need to invest in tools for outreach, maybe get a CRM software or other types of marketing tools. So expect to spend about $0 to $1,000 just to get set up. However, when you're in the early investment stages, you also need to realize that you're investing a ton of time upfront to land clients. Which brings me to my next point, profit margins, the real money, the take home all after all of your expenses. In high ticket dropshipping, margins are typically around 20 to 40%. Because you're dealing with luxury products, customers are expected to pay more, and suppliers will give you a better profit sharing margin because of that. For example, if you sell a $5,000 product with 40% margin, you're walking away with $2,000 profit for just that one sale. Compare that at traditional dropshipping, where margins are 10 to 20% on average. You're selling low ticket items, so even if you do hit $10,000 in revenue, you're probably keeping $1,000 to $2,000 in profit after ad spend, transaction fees, and refunds. Amazon FBA is also similar to traditional dropshipping. You might see 10 to 20% margins, but keep in mind that with Amazon fees, which could take up to 40% of the sale, could eat up to your profit margins. And that doesn't even include all of the PPC costs that you incur just to rank on Amazon. With affiliate marketing, you're only seeing 5 to 20% after each sale. So if you're promoting a product that sells for $100, your profit margin is just 5 to 20. And it's tough to make substantial profits when you're working with such thin margins. With SMMA, profit margins can be 60 to 80% because your main expenses are going to be your time and your contractor's time. So let's say you charge a client $5,000 a month for managing their ads, and you pay a contractor $1,500. You're essentially keeping $3,500 in profit. Let's move on to the next metric, which is demand, because you need to understand that for a business to run, you need people that are looking to buy from you. You need to find demand. In high ticket dropshipping, demand is driven by niche luxury markets. Products like high-end massage chairs, fitness equipment, barbecue grills, or outdoor gear are in constant demand. And here's the kicker. These products are already being searched for on Google. With Google Ads, you're tapping into an audience that has that existing demand ready to buy with high purchase intent. With traditional dropshipping, you could benefit from demand by riding off of trends. This means that while you might have a hot product today, it could be obsolete in a month. You're constantly chasing the next trend, which makes it hard to build a consistent long-term business. Now let's talk about Amazon FBA. Amazon FBA thrives on demand because Amazon is the largest marketplace in the world. But here's the problem. Competition is fierce. You're battling thousands of other sellers for these same products, and you're competing directly with Amazon itself, which often sells the same product as you once you find that winning product at a lower price known as Amazon Basics. So I don't know about you, but that is tough to do. Which brings me to the next one. Affiliate marketing, even tougher. It's demand dependent, but it's not as straightforward as you might think. You're relying on someone else's product to have demand. So if you're promoting a nobody, you're gonna get nobody results. If it doesn't sell, you don't make money. Worst of all, if a company changes its terms or discontinues a product, your revenue stream could just dry up overnight. And last but not least, SMMA. It has high demand, especially for businesses that need help with digital marketing or social media marketing, and every business wants more customers. Therefore, you could make it work. However, with getting more business and more customers means getting more of them to trust you, especially when you're starting, could be a huge challenge. Demand is there, but acquiring clients is the hard part. And the next thing that we have to look at is fulfillment. How products or services are going to be delivered to our customers. With high ticket dropshipping, it is like a dream. You never touch the product, and once the sale is made, the supplier handles everything: packing, shipping, and delivery. And all you need to do is make sure the communication process of that sale is good and transacted so that you can collect your margin and let the supplier do all of the heavy lifting. With traditional dropshipping, it's a bit similar to that, but there's a huge difference in quantity amount of fulfillment, which is exactly what most dropshippers in the YouTube space will never tell you. Many products that are shipped from China with long shipping times have terrible quality control. This leads to customer complaints, refunds, and chargebacks, which will eat up all of your profit margin if you even made any from that low ticket venture in general. So that being said, with Amazon FBA, we continue with our fulfillment game, which is that Amazon FBA is probably the easiest fulfillment of them all, right? You send over your product to Amazon, they handle the shipping, they handle the customer service, they handle the returns, but you're subject to the rules of Amazon, all of the fees, and if a product gets stuck in inventory or has slow sales, you are paying for storage fees. With affiliate marketing, it doesn't involve any fulfillment at all since you're promoting someone else's product, but because of these simplified operations, it also means less control over the customer experience once you do get that affiliate sale. In SMMA, you're essentially providing a service. So fulfillment means delivering results like ad campaigns, content, or strategy. You and your team handle the work, and if clients aren't satisfied, you may lose them, which in my opinion makes SMMA a very tough business model to start with because it's very hard to have clients retention, but if you do it right, then you're gonna have clients, but therefore you also give away all of your time. So depends on what you want to trade it off for, but that's also why many agency owners find it a hard time to scale past that initial 10, 20, 50K a month, because as you do land your first few clients, you gotta make sure they're happy first. They're paying you a few grand a month. So just keep that in mind, because the final metric that we're going to talk about today is scalability. How easy it is to grow and scale the business without getting bottled down. With high ticket dropshipping, in my opinion, scales really well, because with every new sale, you're making larger profits and the supplier handles the fulfillment, so you can focus on what you need to focus on, which is scaling the business. You're not tied down to inventory, you're not tied down to logistics, and Google Ads is the perfect lead acquisition channel for you to scale. Once you have a working system, a working marketing campaign, you just have to increase your ad budget and watch the sales come in. You're not doing any more work just to get a new sale, and the fulfillment is handled by the supplier. And now you're probably wondering, it sounds way too good to be true, and how on earth are you going to sell a multi-$1,000 product? So let me give you guys the best example I can. Imagine a jet salesman trying to sell jets to billionaires. This jet salesman has made millions of dollars selling to billionaires. However, he has never owned or touched a jet. Would you believe that? And the reason is because you don't have to necessarily own a high ticket product just to be able to sell it. You could be just like this jet salesman, but on a much smaller scale. And that's exactly what we do with high ticket dropshipping. We will leverage the brand authority of all of the brands that we work with, all of these high ticket suppliers, and we're going to transact the transactions between someone that wants to buy a super expensive luxury item with the supplier that is selling that. And we are going to make that middleman in between. And that is exactly why I truly believe high ticket dropshipping can be scaled. Now, let's talk about traditional dropshipping. Traditional dropshipping you see is scaled as well by many people online. And it's not that you can't, it's just harder. The low margins mean that you need more volume just to see the same profits as high ticket dropshipping. Scaling a business that's running on thin margins means that you're constantly pumping more money into ads, and any small increase in cost could cut into your profits. Amazon FBA is scalable to a point, and there are limits. You need to restock inventory constantly, and your sales grow, but so do your expenses. You also have to keep an eye out on product ranking on your Amazon, which means that your PPC spend will have increase. With affiliate marketing, it is even tougher to scale because you're ranking on relying on traffic, whether that's organic because you're doing it yourself or paid. Organic is slow and paid traffic can get expensive very quickly. Plus, you're promoting someone else's product. And so if that product loses popularity or the company company changes their commission structure, your revenues will tank. SMMA has a high potential for scalability, but again, it has tons of human management that you need to understand. To scale, you'll need to free up more people and outsource all of the tasks to your clients. That will increase your costs and it ends up trading your time for money. And there's a limit to how many clients that you could even handle to start off with, and then let alone retain. So when you put all of these metrics together, we have unitary gain, startup capital, profit margins, demand, fulfillment, and scalability. The model that stands out in almost every category possible is high ticket dropshipping. And here's exactly what I mean by that. You get higher profits with fewer sales. You don't need a massive upfront investment. You keep more of the revenue than you make. The demand for premium products is evergreen and consistent. Your supplier handles the fulfillment. And the best part is the business can scale fast once you find the right product market fit. Now, that's not to say that the other models don't work. They do, but they come with more hurdles and complications, especially for beginners. High ticket dropshipping offers the perfect balance of low risk and high reward, and it also gives you room to scale without getting overwhelmed. If you guys are ready to learn more about high ticket dropshipping, I have an entirely free community where you'll find 10+ hours of free resources and guides to help you get started. And for those who want to scale to $10,000 a month in profit in the next 24 weeks, apply for my one-on-one coaching program where we'll work together with you to see if you're a good fit to completely change your life. If this video found value, make sure you guys comment the word ecom down below. And as always, I'm cheering for you by the sidelines. Let's make this year your year of success. Cheers.